start recording. Right, recording. So if anyone does want to check out later, they can. So yeah, look, I want to talk through a couple of things. I'm going to talk through a couple of trades that I took and some new things that I've been playing around with lately. I think as traders, we need to ensure we are constantly evolving and constantly learning. As the saying from Spider-Man goes, knowledge is power. Is that right? No, that's not Spider-Man, isn't it? With great power comes great responsibility is what I was going for. Completely separate point. Knowledge is power. And I think you can stick with one strategy, and I think that is definitely a good thing to do, but more experience and more learning can only help. Now, I'm not talking about jumping from strategy to strategy. I think when you've found a strategy that you like, it's definitely worth sticking to it and ensuring that that is the strategy that you follow, and you don't really mess about with it too much. But ultimately, the more information you have on trading, the more you can, whether it's add confluences in, whether it be, you're adding new filters in. Personally, for me, I'm going to keep learning until I know pretty much everything and every strategy. I'm not done. I think there's that. I think to master a subject, you have to do 10,000 hours worth of work. So that's what I'm kind of going for. So I've been playing around recently with these kind of daily highs, weekly highs. Now on my charts, for those of you who can't see, the white dotted lines, the ones that are slightly fainter, those are the previous day's high. Okay, so that's Friday's day's high. Okay, this line here is yesterday's day's high. Okay, and then if we go slightly further afield, here you've got the weekly high and the weekly low. Now, one thing I think a lot of people miss out on is how to properly use multi-time frame analysis. I think what a lot of us will do is we'll just look at literally the structure of the market, i.e. we've had this daily breaker structure, so we're in an uptrend. Okay, and for the time being, whilst I don't think the bearish leg on Bitcoin is over by any means, for the time being we are pushing higher, we are pushing up, and I think a lot of us will just look at structure and then assume that that's all we need, and all we're then looking for is buys. The problem with that is these candles here clearly show us that the market is moving bearish, and if you had been buying in here, you would have been probably kept being stopped out. So actually looking at what the daily candles are doing is a real good telltale sign. It's very rare in a trending marketplace that you'll have, let's say we now know we're in an uptrend. Okay, it's very rare that you would just have one candle pushing up and then it wouldn't really do much else. It's very rare that you have this kind of choppy action. So if you know that you've got your bullish trend, okay, you've been making these higher highs here, you've got this kind of very clear accumulation pattern here where we can see prices changing direction. When you start seeing these bigger candles push higher, they can give you a good signal, a good filter. Okay, what a lot of people do, I think, and Jake, I know you and I have been guilty of this in the past, when we were learning, is right, price has pushed up. Okay, we had this big push up, and now we're in this demand zone, and we're bearish here. We're definitely going to push down. And what a lot of people do is they assume just because they're in a supply zone, that market's going to go lower. But ultimately, this massive candle is a big clue, and what this is telling us is that the buyers are the strong money, and the likelihood is that it's probably going to keep pushing up. So it's a good way to use your higher time frames to actually understand what's going on. For example, this down candle here is an indication that we're probably going to be pushing down, and what you'll notice, especially on the daily time frame, is that when you get these bigger candles, like look at this big push down, you'll then get other pushes down afterwards, big push down, other pushes down afterwards. So when you see these bigger candles on the higher time frames, like the daily and like the 4 hour, use it as an extra filter to try and understand that actually the market might be continuing to push in that direction, rather than just automatically assuming because you're in a supply or demand zone that it's gonna reverse. Most newer traders, especially smart money traders, are addicted to catching reversals, and it's something I've fallen foul to, and to be fair, sometimes still fall foul to, trying to catch the reversals all the time. But Jake, I think you'll probably agree that the best trades that we take are the continuation ones these days, right?
Yeah, hold on, Chris, 2 secs. Anand saying he can't see nothing. He's saying it's all black for him.
Can anyone else see everything?
Yeah, I can see. It's all for me.
Can everyone see?
Come back.
Yeah, I can see your screen. It's all good on my side.
Cool.
I've just asked him to leave and then come back.
Yeah. Jump out and jump back in, dude.
I'm seeing it.
Oh, I'm seeing somebody else's screen now. Anand, you sharing your screen? Right, let me just switch that off so it doesn't get confusing. Meeting options. Yeah. Right, meeting info. See, I'm used to using Zoom rather than Teams. I don't know how to use this Teams. Right, share. Right, presenter mode.
Zoom's just a bit annoying because you only get the 40 minutes, don't you? Unless you pay for it.
I think you do on Teams as well, though. I feel like Teams shuts you down as well. Stand out, what does that mean? Yeah, I think so. I don't know, but I think so. Right, what's going on here? Oh, what is that? That's weird. Is that what you can see? Is that what you can see? That weird cut out of me. I hate that.
Looks like a thumbnail that you've done on YouTube.
Terrible. I hate it. Right, let me get rid of it. Oh no, we've just jumped to the other side. Right, hang on a minute. Right, this isn't gonna work. Right,
hold on. Let me just.
Hey, it's still black for me.
Still black for you?
I can't see anything.
I'm not sure what to suggest, dude, because everyone else can see.
Let me just see what this said.
I do.
Everyone else can see. Right, I'm sharing my screen. Everyone else can see that, yeah?
Yeah.
Can you see it now, Anand?
No.
Blur the air. What is going on? What is going on?
You must have something.
There must be some sort. Could you see it before, Anand? Could you?
No, I wasn't able to see it from the beginning.
You weren't able to see from the beginning. Look, I'm going to be honest. You're probably just going to have to sit here and listen to my beautiful voice for the time being then, because we've only got 45 minutes left, but I am recording it, so you will be able to go back and watch it, okay? Sorry, buddy.
No.
I'll try it on Zoom. If maybe Zoom works better, we'll try it on Zoom maybe next time and see if that works better for you. You might just need to reinstall it your side potentially. Have you got your phone on you?
Yeah.
Can you go on it through your phone instead? See if that works.
Yeah.
Oh.
Yeah, try that. Okay. So anyway, going back to where we were talking. Okay, we have clearly, as you can see, this weekly high has been blown. Now, one of the things that I was missing out, and I'll hold my hands up, I was missing out on my trading in the past couple of months. I've been playing around with this for a couple of months now, and I've started incorporating it in the past kind of 2 or 3 weeks. I was kind of testing it and kind of watching it for the time being, and it has really allowed me to get, I reckon, into maybe another 30-40% more trades than I would. Okay. What ultimately I'd be waiting for to catch a reversal from here is I'd be waiting for some sort of price action like this, okay, and then trading into some sort of supply zone, okay. That's kind of historically always been my entry, and those will still be the main focus of my trading, okay. What I can now do with these daily highs and daily ranges, and by the way, if you want to use the same indicator as me, okay, let me try and get the settings up for you. It's called DWM space HL. Okay, so feel free to make a note of it if you want. Those are the stats that I use. So daily, I do the past 2 days. Weekly, I use the past 1 day, and then I color them, however you wish. I project it to 30 because that then gives me a nice long area that I can see. And what I would say is get it on your charts, because you'll start to see things that you didn't see before. For example, in this Bitcoin example, okay, we clearly broke and closed comfortably, okay, above that weekly high. Now, on the weekly chart, okay, we haven't yet finished this candle. This candle's still moving, but on the daily chart, we've broken above, and then we started playing around on top of it. Now, for me, what I'm looking at is I'm looking for opportunities to either retrace back underneath. Now, if we get a nice close below this weekly high, then what that will clearly tell me is that we are heading for lower prices, okay? Above these zones, you're not going to always get these moves. Now, you can see how price has reacted there. That's a 4-hour candle. You can see the first time it broke, it rejected really, really heavily. What does that tell us? That tells us that stops are being taken out. That tells us that breakout traders are buying from here and then they're being taken out. That was a massive liquidity grab and then a push back down. And if we'd stayed below there, then that would be a great opportunity for more sells. But we didn't. We've pushed up higher. And now on the 4 hour, we have closed above that weekly. Now, that at the end of the day, for a lot of people will think, well, we are only going to go higher now. And that might be the case. We might only go higher. But what you've got to remember is that this is a weekly chart. And price can quite easily do this. Okay? Push up, intermediary candle where it just consolidates, and then we have a push down like that. Okay? And this candle could close here, it could come here, and until we've started making some new structure above here, which in the grand scheme of things we haven't yet, all we've been doing is kind of correctively pushing down. Now I do think we are going to be pushing higher, but what might happen is that price might break and close back below this and then give us some opportunities to go on the sell side. The important thing to note is that this weekly high is a major point of liquidity, and we want to watch price when it breaks out of here and watch what it does. Now, how I ultimately got into these trades was very, very similar, but I used the daily charts, as you can see. I've done a full break. I've literally just finished recording a full breakdown on this, but to give you kind of an explanation as to what I was looking for. Whereas before, for me to go short, I would need a supply zone like that. Now, what I can do is, instead of having a physical supply zone, I can have this creating almost like a liquidity supply zone. So anything above here, as soon as price closes back below that daily zone, that daily high, for me that almost validates this as very similar to a supply zone. And whereas before I was missing out on these trades, for me now I can get into these opportunities, because if you look at the bare bones of everything else in this kind of setup, everything else is there. What's missing is my higher time frame POI. I haven't got that supply zone that I'd be looking to take sells from. What I've got now instead is I've got a liquidity grab, I've got some structure formed, I've got a push down, I've got an imbalance, I've got multiple breaks of structure, and now I've got a return. If you can see here, I've got a return to the 50. So that, other than the higher time frame POI, is a perfect setup. But previously, I would have just not taken it. Now I've got this added confluence. And what you want to be looking out for is when price ultimately breaks above these daily highs, what will often happen is they will come down and they'll break back in. If it breaks back in, then what we can be looking for is then these counter trend plays, which, as you can see, the target doesn't have to be huge, but that turned out to be a 6R because it was a 4 plus a 2. I always take 2 positions. That turned out to be a 4.5 because it was a 2 and a 2.5. This turned out to be I think just a 4 in the end. So ultimately we ended up taking about 16, 17R off these trades. And as we spoke about this morning, we're expecting now this kind of corrective move to then hopefully push higher. But for the time being, if you look at the structure, we're in a downtrend. So I'm not going to fight it. And my targets don't have to be long. If you can get 8 2R trades out, you've taken, why is my maths not working? 16R, yeah, thanks Jake. All right, so one of the other things that you can also use these daily highs for, as you can see, is I think there's this, if you're in 2 camps these days, aren't you? You're either a retail trader or you are a smart money trader. And if you are a smart money trader, you can't discuss trend lines, you can't discuss support and resistance, and you've got to remember that every strategy works. Smart money has only been around, well, technically only been around for kind of 5 to 10 years, but only really got popular in the last 5 years. And ultimately what you've got to remember is that these retail trading strategies have worked for years and years and years. It doesn't mean they're going to stop working. It just means that smart money is more successful and makes more sense. But the point I'm getting at is that support and resistance is real. It does work. There is a lot of psychological things about it. For example, look at this trend line. You cannot argue that although Jake and I are, hungrily waiting for this trend line to be broken, you cannot argue for the time being that this trend line is holding and it's resisting price and it's acting as resistance. What you also can't argue is that this daily high that we've now broken back below is also acting as resistance. So why did I take this trade when it's only got a short target? Well, I'm banking on the fact that we're definitely going to get down to here. Okay, I'm banking on the fact that we may get down to even here. and I've got protection in the same way that a protected high or low is like on a demand zone like this. That's a protected low for stops. This for me now is a protected high because we've got a daily high there, that adds protection. We've got a trend line, that adds protection. So for me, I was like, this is a pretty safe trade. Break a structure, look at that lower time frame view, okay? Break a structure, imbalance, return to 50. I bet you it lines up perfectly. So, you know, you see what I mean, guys, is that, you know, don't, because you are now smart money traders, strong money traders, whatever you want to look at it, ICT traders, however you want to call, whatever you want to call yourselves, okay? Don't ignore the fact that more information can help you. And had it not be for my recent learning of daily highs and weekly highs, etc., as liquidity points, as resistant points, I wouldn't have got into any of these trades. Does anyone have any questions for me? Does that all make sense?
No, Chris, I got a question.
No,
That makes sense, bro.
How you doing, man?
I have a question there on the zone that you got there in green.
Yeah.
You know, you see recently, like in the indices, right? Not necessarily Bitcoin, but you see a lot of liquidity grabbing of these zones.
Yeah.
Just like you just at the weekly levels and daily levels. Do you think we were talking about, like, if it breaks that level, it can go lower, but what if it spikes down like a liquidity grab and then moves up? Would you still trust the move upwards, or would you be more skeptical?
Yeah, I think, you know, it's really important to trade on the time frames that you're looking at. Okay, so what I mean by that is, if you're setting up a trade using, for example, in this case, a 15-minute zone, I was going to mark that up. Okay, so that for me is a 15-minute zone. If you're trading a 15-minute zone, then there's no point in looking down at the 3-minute and seeing price. Actually, I don't need to do that. Break and close below and thinking we're going to go south, because we've got to wait until the 15-minute candles are completed. So I think what a lot of people do is they get lost in the different time frames. If your zone is 15-minute, your setup needs to be 15-minute. And if you're going any lower, that's confirmation only. So for you to then decide whether it's a raid or break a structure, you need to wait for the structure to be formed on the time frame that you're looking at. And what is very likely in these areas, as you quite rightly said, is for price to wick below these and then close back in. Now, the good news, Jimmy, is that this is going to be a quick move. If it's a 15-minute chart, you're probably waiting for a maximum of 3 candles. So within 45 minutes time, you know pretty much what price is going to do. The other thing is I think a lot of us are very scared of taking losses. And, you know, I don't like taking losses. I don't think anybody enjoys taking a loss. But remember, you might sometimes take, let's just have a look. Let's say you had this breaker structure and then this happened, okay? Let's say you took, I'll tell you what, let's say, because I would often do this, you take a risk entry here, okay, with a nice tight stop, okay, and then you get stopped out, okay? You're looking for that liquidity high, you're looking for a 7R, you get stopped out. So now you are 1R down, okay? What you then see is you then see price after that creating, let's just say, actually, let's get rid of that quickly. Okay, let me just draw this on. Okay, so you've been looking for this trade and then price has wicked you out. Okay, then what happens is we get the breaker structure we've been looking for. Okay, and then it does it again before creating a test and then a long higher. Now, this is what you've got to kind of realize in these moments is you will often get these false starts. Remember, we're looking for a very one-sided event to happen. We're looking for a raid, a breaker structure, a return, and a push. And those really clean entries, they don't happen all the time. I think, you know, Jake and I probably would trade once or twice a week if we only waited for the clean entries. Fair, Jake? Yeah. So sometimes you have to take these riskier entries. You have to take a risk entry. You have to then get into a second position to then be stopped out again, to then get the third position. Because what I would have probably done in this instance is done this, okay? Place my stop below that low and then expected it to go up and get me, oh, right, I've lost one, that's fine. Don't worry about that, that's 1R down, okay? This second one, I've got the breaker structure now, so it's definitely gonna go up, okay? And if I get 5R, I'm happy. But that's now been stopped out, okay? But then what we miss is the fact that actually now on the lower time frame, we've got intermedium structure being created, we've got a push down, and then we've got our perfect entry on this time frame here. and we end up missing out on that trade because we've taken 2 losses. But the fact of the matter is that the zone is still valid. And if you've been, you know, I think what happens is people get lost in these lower time frames. If you'd maybe waited for the 15-minute to show you that that was just a wick and then a raid, you might have got into a really clean trade there and ended up in an even tighter position, and taken out, you know, your 4R, which has covered your losses. And if you go up further, you know, you get out even more. So don't be afraid to take 2 or 3 positions. It will sometimes take it, you know. I've had times where I've been so confident on a position going that I've taken 4 or 5 entries sometimes, and then that entry runs for 10R. You still come out of it with 5R rather than giving up after maybe two tries. If price will give you a really clear indication of what it wants to do. If you see this kind of really kind of choppy structure in your zone, just pay attention. You know, patience is great, but too much patience can stop you from actually getting into trades. And, you know, I think at the stage that most of us are in our careers, we've got to be taking risks. We've got to be taking some losses. We've got to be over trading a little bit. You know, I'm real bad. Jake will tell me all the time, I'm real bad at over trading. I don't stop. You know, I'm trading at the weekends. I'm trading sometimes at my trading hours. But for me, I'm still learning. You know, I'm funded. I've got money coming in. I'm hopefully quitting my job in 6 to 12 months. And, you know, life is good. But I'm still learning. I know I'm not an absolute expert. I know I'm not perfect. And I know I've got my own foibles. But I'm happy to keep trading at the moment because I'm profitable. I'm making money. And ultimately, every trade I take teaches me something because I learn from it. Especially if it's a loss, I learn more from it if it's a loss than I do from it if it's a win. You will always learn more from your losses, and that's why your trading journal is so important. Okay.
I think. Sorry, check. What you were just saying about learning as well is like I had this conversation with someone earlier. My girlfriend's sister. You never completely master this. You'll always learn, no matter, even if you're doing this for 70 years. Warren Buffett still learns now, and he's been 100%. Doing this for like 70 years or something.
100%.
No matter how confident you think you are, and you take losses, everyone takes their wins, but your back-tested trades and your strategy shows you why you win. But you learn your losses. You learn from your losses that you can analyze them and see what you need to not do. Your wins are what you practice. They're what you learn. You've refined them, and you know that you take trades to get those wins. Yeah. And you don't even think about them really. But when it comes to your losses, that's when you can analyze them and go, okay, so I took those 2 or 3 losses there, but what could I do to maybe only take 2 losses or 1 loss before I get into that trade? That's the main thing, is to take less losses rather than keep taking losses over and over and over again and then get that 1 trade and you only make the 1R. If you can take 2 losses and then make that 5, 6, 7R trade, then you made 5R. Yeah. And that's how the profitability starts breeding itself more and more.
Yeah, absolutely. You know, and I'm not saying here, guys, you know, go out there and just trade absolutely everything that you see. Obviously, you're always taking a calculated risk, but you will sometimes get stopped out a couple of times. That doesn't mean your trade is invalid. And this is why immersing yourself in the marketplace is really, really important. You can all probably see that this market is bullish, okay? And we are all very clearly assuming that this is probably going to push higher because we've got this impulsive move. That was 2 candles, so that was 30 minutes. And let's say you included all of that move, even that in itself was only 2 hours 45. Okay, price is only just getting back to where it started from, and it's probably going to finish off around here at the kind of precipice of that trend line. Apex of the trend line, but it's taken 2 days. So impulse and correction, okay, and just, you know, if you take off all your drawings, if you take off everything, you can clearly see what's happening on that chart, right? Impulsing up, correctly moving back down. So the expectation can be that you're looking for buys, and understanding just from looking at candles what price is doing. If price is struggling to move down, the likelihood is that it's probably got buyers in the marketplace more than sellers, because the buyers are stopping them from, you know, getting down. And you can see here you've almost got this channel being created now from here to here. That's probably going to break and go and go bullish. But you can see that without the supply zone and everything on the chart, you can see that really clearly what's happening. So involve yourself in the market, immerse yourself in the market, and spend as much time learning as you can, because now's the time to be making mistakes. Now's the time to be over trading. Now's the time to be spending hours and hours and hours on the chart. Despite what any of us tell you about walking away from the charts, placing your trade, walking away, we're all bullshitters. We all do the complete opposite. Every single one of us who tells you walk away from the charts, man, take your trade and walk away, we're checking every 10 fucking minutes, because that's what we do as traders, all right? And we can give, it's like anything, isn't it? We can give good advice, but we're not always going to take it ourselves, because everyone's still learning, and until all of us have got trading empires and have quit their jobs, then I wouldn't class us as experts just yet. We're just a bit better than where you guys are right now. Anyway, we went on a little bit there. Grinder, Jimmy, did that answer your question?
Yeah.
Good.
I just have another one.
Yeah.
Do you have any advice for when you're doing counter trend like this one? Does the corrective nature of it give you a good sign you can at least play it until you reach the next zone?
Yeah, case? Absolutely. So that was taken today. Let me just hide that for now. All three of these trades I took off at the zone. And as you can see, price met that and perfectly rejected. So, there's two trains of thought. When you're learning and you're newer, there's an argument to say you shouldn't be taking counter trend trades because they are more difficult. There's a lot that's gone into this trade, a lot of my understanding of the marketplace that's gone into these trades, and I could have quite easily been whipped out of all of them. I was happy with the risk that I took. I was happy with the way that I traded them, and the confluences have only started growing as the weekend has progressed, but ultimately this could have gone completely wrong. If it had, I would have lost 1R or 2R because of my two positions, and it's not the end of the world. So they are higher risk. I would always go for shorter targets. Okay, now if let's say my target was only 3, I'd be coming out with a 1 and then stopping out finally with a 3, and I'd be half considering whether it was even worth it. For me, this first trade was worth it because it was plus 3R. This trade was adding into it, so I was happy to come in and out of it. This trade was adding into that, so I was happy to come in and out of it. So these kind of additional trades I don't need massive R on because I'm looking for my big trade to be the winner. So you want to trade them differently, definitely. You want to have a different set of rules. I'm happy to put my trading rules up. I've got a quick access trading rules on my phone. I'm happy to put my rules up on the Discord. I'll post them up for you later. But these counter trend plays, they have to be traded differently. Okay, and there was a lot. Whilst it looks like a simple, just kind of corrective move, there was actually a lot of thought that went into this, much more than if price just does that. Do you know what I mean? That's a really simple trade, okay? Because we're in bullish, break a structure, enter on the 50%. That's a really simple trade. This is actually a more complicated trade, so it's definitely worth being a bit more patient with them, practicing them, and backtesting. Backtesting is a bit of a funny one because it's boring and it's really difficult. One of the good things that I tend to do every kind of week is, let's pick a chart that I haven't really used that much, okay? So one of the things that you can do with your backtesting is you can mark out trades that you missed. That's quite a successful way to look at kind of trading positions and get your eyes kind of focused in. So, I can see here there's a supply zone here, I think on the 2-hour, yep. So there's a clean supply zone there with imbalance, as you can see. Prices, tag that. So what I'd be doing is I'll be saying, right, okay, so we've had a push down here. We've been taking out this liquidity above here. Price is then broken, giving us a couple of breaks of structure, created more zones here. Oh God, what's happened there? Created more zones here, giving us a retrace into 50%, and then ultimately broken down. So if you are not quite yet enjoying or finding yourself doing back testing, because it is difficult, and I think anyone who's done back testing will understand it's difficult and it can be boring. I kind of think using the replay function to back test is more advanced. And this is a much simpler way to get yourselves tuned into how the market moves. Just going back onto historical data, looking at how the charts move, and looking at how you might have entered positions. Now you've got hindsight and that perfect kind of 2020 vision. You know, you've got another one down here. You know, a lot of these you might not take in live market conditions, but you can at least get used to how the market works. I mean, I just take
that's
that back.
That's a perfect example of what you were talking
It
about
is, isn't
earlier.
it? Yeah.
Well there, Chris. Yeah, that's. Do you want to just explain that?
So as you can see here, prices come down into. So look, we've got. I'll mark it out completely. Okay, we've got a raid that gives us a nice indication that there's some sort of, you know, some sort of big player in the marketplace. We have had a pretty weak, to be fair, break of structure. Okay, and this, to be fair, might have been a position that you would have missed. Let's have a look. I tell you what, let's just open that up. Let's see if that's a daily or weekly. Let's put in 2 weeks there. So we got, nah, it's up there. Nah, it doesn't work at that time. Let's get rid of that. So what we may have found here is, let's have a look. Let's see what we've got. Okay, so it's a good example. So I'm going to hide my marker. So this is a great example here, okay? And this is, I think, Jake, you'll probably agree. Let's say we were looking at this just on our classic smart money eyes, okay? We would have probably maybe missed this trade. I mean, the range is here. This moved down. I suppose technically this is a break of structure, but it's like internalized to this other one. It's a bit iffy, isn't it? It's not the greatest.
I'd just even if you use the higher portion of that leg that you've just marked
that
up,
one.
It's still so weak.
It's so weak, isn't it? Okay, so this is a good example of trades that you might miss if you are just purely purely smart money based. Okay, this is a really good example, and it, funnily enough, this has worked out very well. It's almost like this is pre-planned. This is also what, Jimmy, you were talking about earlier. Okay, so what I'm looking at here is price. Let's just draw out here. Okay, that is our daily low. We only need that one there for now. Okay, you can see very clearly that price is bullish. So we are going to be looking at bullish continuations, but you know, this consolidation of price, this, you know, in a higher time frame doesn't give us much indication that price is going to keep pushing higher and higher and higher. Okay, but what I'll now be looking at is the fact that actually we've got this pretty clean. If you look at now on the 4 hour time frame, that is a pretty clean 4 hour demand zone. Okay, and it has, although it is pretty weak, it has broken structures. Okay, there's some indication it wants to push higher. Sometimes you have to blur the lines a little bit. Okay, and this will get you into more trades. We've got in here some liquidity, as you can see, building up pretty perfectly like that. Okay, and then prices enter the zone. Now for me and Jake, for the time being, this isn't strong enough for us to consider this as a really good zone to go long from. And in fact, we might have even been just waiting for some shorts from this, because that is absolutely cleaner and that break of structure is better. But what I'm now looking at on these areas is these kind of breaks and closes above. So Jimmy, you can see this zone hasn't held. Okay, this zone has broken and closed back above. But the zone we drew, if I just get it perfect for us, okay, the zone we drew was on the hourly time frames. So whereas on the 5 minutes you've closed, not convincingly, admittedly, you've closed down below the zone, on anything above the hour, you can see they're just wicks. Okay, this is where a risk entry might have failed, but realistically you probably wouldn't have taken out a risk entry on this anyway. Okay, because it's a shit position. Okay, it's not the greatest of demand zones. But what now I'm looking at is well, actually, we've broken this daily low. Okay, I'm going to mark that out for you so you can all see what I'm talking about. Okay, we've broken that daily low. We've clearly pushed back in, and now this kind of break of structure here. I mean, I wouldn't have got this because it's in Asia, okay? But you can see, if this had happened in London, I bet we'd have had some really good price action here, okay? This break of structure gives us a clear indication, actually, we are now going to be pushing higher. And for me now, what I can look at is I can say, well, actually, this is a pretty safe trade because we've broken the daily low, we've closed back above it, the price is ultimately in a higher time frame uptrend, and I'm going to get 4R, 6R out of that, just up to that supply comfortably. Okay, we've got this liquidity built up here, and we've got this supply zone just above. So we've taken out the first supply zone there, like that. Okay, we've got this next supply zone up above that. And, you know, what was that? A pretty decent 9R, 10R trade. So the daily, the highly lows, that's worked out pretty perfectly for this webinar really. The daily and the highly lows are just another confluence to add into your trading. There's another signal, it's another supply, another support, another resistance, another demand, whatever you want to look at it as. Confluences are what make you a strong trader. And if you can then see structure forming around these areas, for us as smart money traders, we would have seen that probably as a pretty weak zone. We might have traded it, we might not have. But for me now, I've got that added confluence because that daily low was swept, liquidity was taken, and we can see, look, it's obvious, isn't it? Now I've highlighted it, it's obvious, isn't it, that that was a liquidity sweep. It's taken the liquidity from below that zone. It's taken liquidity from below the daily low. Okay, it's pretty clear that there's, you know, strong money in the marketplace, and the likelihood is now that liquidity's been taken. Where's the next liquidity? Where have you got to get to? You've got to get below this zone. Well, what's more likely to happen? Okay, what's more likely to happen? What's closer? Well, the low-hanging fruit, as I think ICT calls it, is the closest liquidity. Well, it's taken out those points, so the next closest liquidity is there, so it makes sense that price is going to continue up. And then we've broken another daily high there, I think. Yeah. So you can see there, it's then cleared out the daily high of the same candle. So, you know, it's cleared out the market on both sides, guys, pretty clearly. It's taken out the daily high there. Again, it's wicked above it. And this is basically the same trade as I took on Bitcoin over the weekend, look, okay? So you've closed above the daily high. What's that on there? Is that, oh, that's price where it is at the moment, okay? So it's closed above the daily high. It's closed below the daily high. We've started creating some sort of structures. As we saw then, you know, you could have got in there really. You could have got into the trade there with a stop above that, and you've been pretty nice there. And it looks like price is going to give other opportunities to do it because we marked out that one just a minute ago earlier. There you go. So, you know, it's gunning for liquidity on both sides, and then that new low there, that's been taken, okay? All price is doing at the moment is it's just sweeping out liquidity up and down the marketplace. Let's see if it gets that final target. There you go. So, you know, using those daily highs and daily lows is a really good way to get yourself into those other trade positions that with pure smart money you might have missed out on. You may have taken that buy with pure smart money, but you definitely wouldn't have taken those sells. However, that added filter, that added confluence, especially look, you've got that confluence of that supply zone there, broke the daily high, tagged the supply zone, broke back under the daily high, create some structure, and then push down. You know, it's absolute no-brainer, guys. So yeah, something to definitely start playing around with your trading. If you want to use the indicator again, it's DWMHL. All right. Any questions?
Not a question.
No. Cool.
But,
Cool.
It's quite important for everyone to realise that that's how what Check's just shown there of, you know, the taking of the daily highs and the daily lows. That essentially is how the market moves, is because they use liquidity as buy stops and sell stops to get people involved. And it's not just people like us; it's more, you know, like much bigger people who are playing with a hell of a lot more money.
Yeah, absolutely, guys. You've got to understand that, you know, the daily highs and the big players, the ones who are playing with millions and billions. Okay, they're not looking at our charts. They're looking at daily, weekly, monthly. They're not looking at hourly charts. They don't care about that. Their positions are much higher time frame, and it's the institutions that move the market are looking at the very high time frames. The banks and the hedge funds, they're maybe looking at the hourly time frames, but they don't go onto the minute charts. So what Jake was saying there, you know, is really valid. That's why these daily zones work so well. Sorry, Jake, interrupted you. Carry on, mate.
Yeah. So obviously the sweeps of the daily highs and the daily lows, that's they're tricking, you know, all the bigger banks and stuff like that. The people who move the market, they're not the banks. Like everyone says it's the banks, but it's not. It's people that are way bigger, like companies that don't even exist on, you know, the stock markets and stuff. It's people that you don't know about, but they trick people and big banks and stuff by taking these daily highs, getting them involved in the market, and then swapping the market up again and using their money to then move the market in the other direction, because it's a zero-sum game. They have to take other people's money to make their money, and then vice versa. You know, they have to go high to go long. They have to go high to go short, and short to go high, and it's constant all the time. But if you're staying on the daily chart and stuff like that, it's so much more obvious. But like Czech says, when you get caught up in the, you know, the 1 minute and stuff like that, it can get really fucking confusing.
Yeah,
but
really messy.
That's why top down is so much more important than everyone thinks it is.
Yeah.
Like, just because I post 1 minute charts in the group all the time, I only ever enter on the 1 minute. I'm guilty of it, but I've been trading the 1 minute for probably like a year and a half. So the 1 minute to me looks like the 15 minute. But if someone who's been trading for 2 months just goes on the 1 minute chart, they are going to have their mind absolutely blown by all the candles. They're not going to have a fucking clue what's going on.
No. Yeah. And
but sorry to
you carry on.
Check. Just because you see me enter on the 1 minute, it doesn't mean that I'm purely looking at the 1 minute. I'm constantly cycling through the 1 minute, the 5 minute, the 15 minute, 20 minute, 30 minute, hour, 2 hour, 4 hour, daily, weekly. Obviously, I'm not going to the weekly every hour because it's pointless, but I check the weekly every single week, and I check the daily every single day, and I check the 4 hour every single day, and the 2 hour every day, 1 hour every day. And then because the 1 hour doesn't change as much as the 1 minute, I know that my 1 hour structure is always going to remain prevalent for maybe 3 to 4 hours. And then after that, you know, you check the 4 hour and you make sure that everything is still in line. And then if the 4 hours, if it's still in line, then, you know, you're good. And then you check the 8 hour, etc., etc. You don't just stay on the 1 minute all day and you go, I'm just going to trade every supply and demand zone. That I find, because you will lose big time.
Yeah,
you will lose heavily.
And you know what Jake and I have now, because of just almost like what's the word I'm looking for, conditioning to how we trade, is we have like an internal checklist of things that we're looking for. That for you guys, what you need a physical checklist. You need like a list of 6 or 7 things that you are checking off before you take a trade. So we automatically see our confluences because they are drilled into us. You guys, you need your own confluences that ultimately your own checklist that will give you your confluences. So, and you don't trade until 5 or 6 points are matched, and that might be supply zone, sweep of daily low, break of structure, imbalance, return to 50. That's 5 points there that you can now enter a trade. And then what you do with that is every single time that happens, you enter a trade. Okay, once your checklist is met, every single time your checklist is met, you enter. And really, it's that simple. People overcomplicate trading because they don't have checklists or a trading plan, or they don't have a structure that they know works. You know, a lot of the chat in the group a lot of the time is, what do I do when this happens? What do I do when that happens? And for me, in my head, I'm screaming, you need to test these rules out. And whether it be you do what I've just done there, okay, that technically is a backtesting session. Because what we've done is we've looked at how the market has moved, and we've drawn out trades that we could have entered. So if you don't want to literally go on the replay function and then try and find trades, which is much more difficult to do, and as a new starter is going to be more difficult for you to do exactly what I've just done there. Look at areas where price has reversed from, and then try and find ways that you could have got in the market. Look out for patterns that occur over and over again, and then try and find ways. And then what you'll see is, right, well, every time the price reverses like this or moves like that, these 4 things happen, or these 5 things happen. Now, when you go into live markets, wait for those 4 or 5 things to happen, have them written on your phone, have a physical checklist, wait for them to be met, and then take your trade. And I promise you that will make you more profitable. Now, I've just had a warning. We got 15 minutes, 9 minutes, I think, or some sort of short amount of time. Yeah, 10 minutes left on the Zoom. Jake, did you want to go through a trade? Do you want me to...
Yeah, sure.
Yeah? Okay.
How on earth do I share then?
I think if I go stop sharing, share... can you click... Have you got the share function on there?
I wouldn't even know where to... Full screen... Oh, share, yeah.
Yeah? Got it?
Right, yeah. So, presenting... Can everyone see?
Yep.
Right.
Yeah.
So this wasn't this week, but this was like probably the cleanest trades I've had in a little while, to be honest. But so this is EU, and obviously, like I said, checking all the time frames all the time. So weekly is clearly very bearish. Breakdown, very obvious. Daily was, then it started to get a little bit more choppy. We had a breakdown, then we started pushing up and breaking this high. So a lot of people would be thinking we're bullish, but like Czech said, we took this high. So after we take this high, then not saying we can always expect a retracement, because that could just take off. But overall, weekly is bearish, and we were coming up to, this was a refined zone, but I did have it at that point before when I got into the trade, but and then I refined it to the actual extreme of it. But when it wasn't there, let's just go back to where that was. And then it came into here, and then I was just watching it from this point, and then I just went down to my lower time frames, and then we had this nice push up. Ooh, and then it was just met with real stopping straight away. This is like perfect.
Look at that arc, lovely arc.
Yeah, that's just, you want to see, you know, stopping, gets to the top, stopping, gets to the top, stopping again, gets to the top, but it just stops and just melts down. Now I didn't get in straight away because this could easily form a reaccumulation and then just go ahead and carry on going higher. But like Czech says, it's okay to take losses if you wanted to, and you wanted to take, say, that POI there for a sell, which it wouldn't have been hit anyway, but let's just say it did just go like that and then come back down and carry on. At the end of the day, it's still a clean trade to take because you had a nice breakdown, which was really impulsive. But reaccumulations do that. They trick you into it all the time. But I wanted to wait for another breakdown in price again. So,
and one thing just to add here is what we definitely wouldn't be looking for here is buys. And we wouldn't be looking for buys here ultimately because we're in a higher time frame supply zone. So, you know, the only thing you're going to be considering here, because, you know, the classic range theory is involved. We're in premium of a range. So we're only looking for sells. And if, you know, you get a reaccumulation, you just ultimately, it's just, you ignore it. You don't have to get into everything. So what Jake's done is he's filtered out. He's ultimately seen that this is an area to sell from. And yeah, there's a couple of confluences. The two breaks of structure got him into the trade.
Yeah. So yeah, obviously then we had the, like Jake says, yeah, we're in the premium of this leg. Like if you just don't even think about when you're on these time frames, like you could look at every single structure point and be really confused like this, and then you're like, oh well, we've broken this high, we're bullish, and then you could see this high as another break bullish, but realistically we're still in this extreme of here. So you've got push up, push down, push up, push down, push up, push down. This is just a 1, 2, 3, 4, 5, and then we're coming into this deck. So there's no reason to be looking for longs unless you were down here on a lower time frame to be trying to get up to here. But that's obviously, like Jack says, you know, that's counter trend. It's more risky. You've got to manage the trades differently, etc., etc. But anyway, yeah, I'm trying to rush through this because I know we're
6 minutes. You've got 6 minutes.
Yeah. So as I was watching this, we had this breakdown. So I'll just draw the structure a little bit. This is where, being on the lower time frame, then you can start using these intermediary structure points, and start to confirm it. You can be a little bit more risky with these. With the daily and stuff, you know, this is where the bigger guys, they move their money this way, so you don't want to be using all the tiny little ups and downs. But when you're on the lower time frames, you want to use the much more fractal structure, because otherwise, if I was waiting for this breakdown of this price here, I don't think I would have actually ever got into a trade, because I would have been waiting for it to come back up to here, and I never would have got in with anything, right? Because it never actually made it back up to that point. But as I saw this breakdown and then this breakdown again, obviously I saw this come back in. I was like, that's clean, so I'm going to take it. And I'll go on to the 1 minute in a second and show you. And then it was essentially the exact same thing again after I saw this breakdown. I was actually waiting for it to come up to that POI that I said, but it never did. And then we had another breakdown again. So I wasn't classing this wick as a break, because as Czech says, that's just, what do we see that? That's just a wick and a straight up return back in. That's not clean at all. You would never ever trade that. If you did, then you're just foolish and you're just asking to lose money. So after I saw this breakdown, which was really, really big, and like Czech says, if there's big candles like this, they're always expecting to come back down. But when it came back up, I'm not gonna not take this trade. It's so obvious, right? And unfortunately, it didn't actually come back up and tap me in. But that's it. That is what it is. I still managed to get into another trade, but I'll show you how. So basically, all I did was I just saw all these highs getting formed, all this liquidity, and then this big push up, which was met by another little stop. So this is where the 1 minute is a bit more tricky, because I'm not saying this is what you could do, but you could see this even on the 5 minute. You could see a little pullback like this on the 5 minute, but then you see this big push down. This big push down doesn't happen for no reason. There's clearly a reason for them to be doing this. But when I didn't want to get into this one straight away. I wanted to wait for another breakdown in price again, and then when it did, I think I actually used this one, so I think TradingViews moved it, but I just used the most clean supply zone that was left behind, really. And after we see this is a low, a high, a breakdown, and then another high, and then another low. So this is technically the protected high on this time frame. Obviously, on a 5 minute, this might be the protected high or something, but I'm trading the 1 minute, so I've got to follow with what I know. And that was basically that. I just used the most clean supply zone that was left behind after the most recent break of structure, and yeah, that tapped in perfectly. So as you can see, unfortunately, this one didn't actually ever get tapped in. And then as I was following this structure, this was a little bit more of a risky trade, but I was just following it up, and I was like, well, this big push down, it doesn't necessarily have to come back up. So I was just watching these highs, and then as these highs all got manipulated with another push down, I just took the trade, which was a little bit riskier, but
it's risky. But you had impulse, you had imbalance, so again, you're ticking off your confidences, aren't you?
Exactly that. It worked out, yeah. And then and from here, I didn't actually, because unfortunately I was trying to fit a kitchen at the same time as this. This was so unfortunately I missed this one, so I didn't actually ever get to see if it would have given me an entry, but just have a quick look. So this is where you can just see the fractal structure again. So you've got high, low, high, low, high, low, high, low, high. So after this breakdown, I want to see another breakdown in price again. Then you have this breakdown here, and then I would have used that supply, but yeah, unfortunately never got tapped in. But
15 seconds.
If you were then following price even further, you could have then used this one and then just protected yourself above that high.
Guys, we're going to get cut off now, but I'm going to upload this. Any questions, pop them in the group, all right?
Peace.
Nice one. Cheers.
Yeah, thank you guys.